Awesome. I believe we're streaming. Let me make sure that we're live here on Discord as well. Cool. All right, test. Okay, cool. All right, welcome everybody. My name is Spencer Regal. I am the Chief Crypto Options Trader and Strategist here at DARMA Capital Trading. Today is June 16th, 2025. And each week we do a Bookmap stream, right? And so we get on here, we talk a little bit about the macro, and then we break it all the way down to the micro, what's happening here and now, and then kind of what's going on in markets, right? So I've kind of already introduced myself, but you can find me here on X at _RIEGLE, or we are starting to become a bit more active on our X profile as well. So DARMA Cap Trading, or you can find me at LinkedIn, Spencer Regal, right? So just my name. But for sure, I recommend checking out DARMA Cap Trading. We are posting some outlooks, posting a lot of different cool things that we're going to continue to keep posting, and we're going to post it all there. So make sure to check that out. Without further ado, let's kind of dive into disclosures before we break down into markets. But all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors, right? Past performance is not necessarily indicative of future results, right? And so each week we start the session talking about risk, right? And so as a trader, the single most important thing that we have is our seat at the table. And so what we like to define risk as when you're trading is risk capital, right? And that's capital in which you're willing to lose, you're willing to put at risk for a reward, right? And so if that capital is going to be used for the end of the month, right, a bill, or it's going to be used at the end of the week to pay for groceries, or even to enhance your life, right? Those are things in which we don't deem as risk capital, and that capital is better used in those avenues, right? And the reason behind that is twofold. One is psychologically, if you're thinking about kind of your bills at the end of the month, you're thinking about your grocery bill, or you're thinking about what you can and can't do this weekend because of a trade that you take, that is negatively going to impact your psyche and really skew how you interact in that trade. Next piece is obviously the risk of, let's say, a trade going bad and not being able to pay your bills. That's not a seat at the table, right? And so every week we start out talking about risk first before we start talk about kind of the opportunities that exist. A bit of house cleaning. We also start each week with talking about our new website. So dharmacapital.trade. We're actually going to do the full breakdown this week on the website. So if you head over there, you can see everything that we are about, right? So about Advisory Analytics Academy. We offer a lot of free stuff over in the sign up. If you're interested in what we do, go over there, take the trader assessment. It's free education, free trader assessment. It's a fun little thing to help you understand yourself as a trader, and us as well, if you are to proceed into further development and everything else that we have to offer, right? All right, so for those that are new, we usually take a top-down approach to markets, right? So macro events, then we go into some more intermediate time frames, right? Which is the weekly, and then we also go into the microstructure, right? So we pull up Bookmap on the right side you see over there, and we look where that resting liquidity is. We compare it to our price map, and we get into strategy and an outlook based on all of that, right? And so last 7 days have been incredibly active in markets, right? And so there is oftentimes the seasonality around summer trade where it dies down and volatility kind of compresses, and it seems as if that may not be the case. And we've kind of talked about that a little bit more over the last 2 weeks, but anytime we have a Trump regime, tends to keep you on your toes, right? And so this time it wasn't out of the U.S. administration, it was actually out of the Middle East. And so obviously there was escalations in the mid to latter half of last week. Israel attacked Iran, and then since then there's been about 4 or 5 days of back and forth escalations, right? And so how that war continues and how long it takes absolutely is something to watch in markets, and how commodity prices, how that's impacting generally the broader state of the market, right? It continues to be a further difficult landscape in terms of inflation just going down, Fed just cutting, and all of a sudden risk assets just going to the moon that we've been used to for a significant portion of time. So while markets sold off initially on the attacks, the U.S. equity market is back and above those headline highs, above those headline highs. And we are looking at a point in 0.43 on the Nasdaq, on the NQ, and then around a point on the S&P, right, the ES. And so a couple things to think about, and then volatility VIX has been selling off since then as well, and is almost back to that pre-event news, right? So a couple things to think about. As of now, it seems as a non-event. Markets have priced out that risk. They seem to not care as much. However, escalations there absolutely matter, and it's going to continue to catch front page news, right? Other things to think about in terms of just broader is thinking about commodity prices, right? Oil that night saw a large increase in price. Again, as the broader world is fighting inflation, the U.S. in particular is fighting inflation, a higher oil price and a significantly higher oil price is not conducive for that mission. Now, with that being said, always keep an eye on the bonds. Bonds continue to be interesting and trading a little bit on their own as of late as well. Next piece to think about and kind of talk about is the FOMC. Right, and so I have the Fed rate probabilities for the meeting in 2 days, and there is a 99.8% unchanged priced into the market currently. That is likely the case, and as you go out in further durations, you'll see that probability changes, with SEP being right around a bit more distributed, right, than July and June. So that is something to look forward on as we head into this week. So those are broader kind of risk things to talk about. Outside of that, specifically in Bitcoin and Ethereum markets, Bitcoin, there continues to be a corporate bid, right? MicroStrategy came in and bought $1 billion, around 104. That headline came out this morning, and the new kind of corporate strategy around Ethereum. So that's interesting to watch and something to notate as well, right? And so that's kind of a page out of MicroStrategy's book where you kind of have this corporate entity that's buying up all this spot, right? So those are two things to think about as well, specifically here in the crypto markets, right? And so we do support cross-asset, but most of the time what we talk about here and now in the Bookmap streams are predominantly Bitcoin and Ethereum outlooks. We do dive in to any other kind of coins, any other assets at the end of the stream as well. So what we're going to do here is head over to the website, and then we're actually going to go through a full outlook on the website. So we have the outlooks We do now have integrations with pretty much all assets here with our price map. So, a couple things. Let's pull up Ethereum, and then actually let me do this as well. We'll pull up and we'll go through one of our recent posts over the weekend. So it was an Ethereum outlook talking about structure, and so what you're looking at here is our monthly data that we have been using for Ethereum just to kind of understand where the market's at and key figures, right? So a couple things to think about as we start the outlook is we always start every session at the directional. Directional is that over-under number, and this is what you see on the left here, and I'm going to make sure that I can see it just on YouTube. I'm blowing it up big enough. Okay, perfect. Cool. All right, so what you can see here on the left is our proprietary data and analytics. So this is the price map, and this is our monthly duration. And what you'll notice is the directional here is at 2392.5. So we get new data at the first of every month, right? When we're looking at the monthly duration, we also support daily, weekly, quarterly, and yearly, right? And so specifically here, we're looking at the Deribit monthly duration of the ETH perpetual contract. What that means is, first we start out with the directional. Over it's positive, under it's negative, right? And so obviously you can see a lot of price structures held last month after this rapid increase in price, and we've continued to maintain that positive posture right through the balance of the month, and we've come down and we've tested it. This was after the Israeli invasion into Iran, and then another key figure to note is the R level, right? And so oftentimes when we're talking about markets, the R level has been under the market, right? And what does that mean? That means that the sentiment bias is positive, right? If you kind of scale back and take a look at Ethereum on kind of a broader scale, right? And let's pull up, let's kind of zoom out here. Pull up the monthly. And then I actually have some charts down here as well that we can play with. But yeah, so this is just some of a different platform in which we integrate with as well, but it's all similar data, right? And so downtrend, we all know, and we've all kind of survived through the first 4 months of the year. All of a sudden you get this rapid price, and then we've just been digesting this, and we took a stab at that R level. But for those that remember kind of when we come on here and we talk about it, if a market is going to perform perfectly to our expectation, that R level should hold and contain that advance, right? Or contain that decline. And that's exactly what happened here, right? And so coincidentally, obviously you have a risk event in the form of an Israeli invasion. However, the price structure is still held. That was the expectation based on the data, right? And so currently what we're doing is we're kind of just trading in this large band here, holding 2392.5, and that upper range at 2908.15 is kind of containing, right? And so current outlook, if you kind of dive through here, we'll go through and read this, but this kind of breaks it down for you. So the directional is the pivot that makes near-term trend control, right? So we talk about it as kind of that price bias, the R level being that sentiment bias, and the UP here and the DP define that critical range. So what would be a normal range expectation for trade, with the thought that if we are going to break it, we target downside target 1, upside target 1, right? So upside and downside pivots that frame the trade band. R level, sentiment switch for the period, bias turns positive above the R level and negative below it, right? So the fact that we test it and immediately retrace, the market is performing to expectation of the price map of the month, right? And this is still digestive action, right? So we broke it down, made it fairly simple. 3 scenarios. Bullish continuation, which is ETH defends this first kind of break, which is what we see as the opening range low, the first low of the first week of the month, right? And grinds towards 2908. If you pull up today's chart, it's kind of what we're doing. We're right around 2651 after taking a stab on the invasion down at the figure and holding. And then we've based, there's a previous month close. We closed here last month, and then we based last night, and then we're right here roughly, right? So buyers aim to neutralize the negative sentiment by reclaiming the R, right? And so that in this scenario, immediately 2651, all right, we continue to hold, we price up, we take a stab at 2908 once again, but this time we break through, right? If we break through and we can hold 2908, the expectation is the expansion of the range, targets 3380.62, right? That is a big what if, right? That means that the market has to take a stand, and we only have roughly about 12 days left in the period, right? Let's see. Yeah, about 14 days left in the period, give or take. Couple weekends in there. Weekends tend to be a little bit less volatile historically. So the next scenario is intraday dips to 2320, but no decisive daily close below. Broad choppy range traps traders, yet leaves them long-term structure constructive for July, right? It's kind of what we've seen. So if you pull up the market here, it has been a very choppy trade. This is the night of the invasion. All of a sudden, we price all the way down. It's been choppy around the previous month's close, and we've based and we've now advanced in price, right? A hold here over 2637 in 17 cents does target that previous month's high and does target this 2908. So currently, we are in scenario number 1, right? Where does scenario number 1 be mitigated? It really is mitigated if we break down under 2637 in the next couple of sessions and we can hold that high, right? If we can't, this market can rally, and it can rally quick. This is Ethereum. Ethereum can move. So let's see here. Now, if we break the 2637 and we just remain in this choppy range, again, that's sideways range action. It's constructive, right? We don't really break down under those structural levels around 2400. However, it is going to be sloppy and choppy trade for the remainder of the session. Bearish extension. So persistent trade under 2320. Plus failed retest of 2392.5. While this is the lesser likelihood, right, especially after today's advance, it is something to watch, right? First thing to watch is under 2637 in 17 cents. The market needs to hold that, and it needs to really move, right? When I say really move, it needs to make a similar move to this to really define that it wants to go lower, right? A breakdown that holds 2392.5, even if it were to come down to 2360, 2340, right, and bounce right back, and let's say we're trading around 2400, and then we base again, that's scenario number 2, right? Scenario number 3 targets 1989.5, right? And that is a meaningful break under 2392.5, right? So, how to play it. Let's talk about strategies, and then let's pull up Bookmap as well and see where some of that alignment is. How to play it. First and foremost, here and now, we're at 2651. A market that can hold that 2640 area, really, and make a base over that 2680 tonight, has legs. And that has the potential to really take a stab right back at that 2900, right? and then a what if is in play. That what if expands all the way to 33.8062, right? Scenario 2 is we break down tonight. We had a positive advancement, but let's say the market is discounting the fact and is concerned about the FOMC, whether it's buy the rumor, sell the news, even though it's priced in. However it is, if price is under 2640 and uses that as a top, that is scenario 2, unless it breaks significantly under 2392.5, right? So how to play it is basically, if you have risk on here, the idea is to always, we as traders want to participate in optimal markets. A market that's under 2640 is not optimal, right? And it just means lighten up. That's all it means. So that's Ethereum. Let's take a look at Bookmap and see where we have some resting liquidity. So we have some resting liquidity here at 2450, right? So again, right in front of that kind of low area where the expectation is for scenario 2. You have it sitting, let's see, there's bids stacked, basically layered in here. The most significant is right around that 2450 area, but you do have a couple thousand coin per 10 points down, right? On the offer is relatively light. You have 2750 sitting on the offer. That is, if we pull up a weekly chart, which we often talk about here, this is our monthly. We pull up the weekly. That's right in alignment with our weekly UP, right? And so we see markets on multiple different durations, each of which tell a bit of the story, right? So when I say story, you'll notice that the R level is down here on the weekly. That's positive sentiment on the week, right? And a price over the directional is positive price on the week. Plays to number 2, right? As long as we can base over here, that plays to number 1 scenario, right? And if we can really take a stab at 2750 and take out some of this resting liquidity up here, 4,500 contracts at 2750, that again is in alignment with number 1. And then we'll take a stab here at 2957, right, on that weekly time frame. So that's how to use a bit of the weekly and the monthly. We oftentimes just talk about the weekly. I wanted to hop on here and show a bit of everything. We also cover market state and market structure. So that kind of defines the expectation for the week, right? So currently we are in a neutral digestive market state, which is more in alignment with number 2 scenario. That basically means that the market state is characterized by sideways trading conditions with limited profit potential. Opportunities exist on both sides of the market, but directional moves are not suspected to be sustained, right? Where does that be proven wrong? Over 2750. That neutral digestion, right, has the ability to be wrong. And then really under this 2300 area breaking down, again, that has the potential to prove the neutral digestion wrong. One thing to note with neutral digestions is neutral digestions always precede breakouts, right? Just fundamentally. So while it is a neutral digestion, respect price structure. We haven't broke it since last night, and we continue to maintain it. So a market that continues to hold positive price structure is not a market you want to fade. Okay, so we'll go into, we also have strategies here that goes in as well. If you're interested in any of this, go to the sign up and do a free trial, and then get in the Discord, and we can talk about all of that as well. But let's hop over in an effort to preserve time. Let's hop over and talk about Bitcoin, and we'll do okay, yeah, we'll do show the weekly here. The daily has been non-stop all day. So actually, let's talk about the daily first, because one thing to note is oftentimes, and we talked about kind of a perfect structure with Ethereum, sometimes the R level doesn't hold, right? And when the R level doesn't hold, that's actually a strong sign of strength. And immediately that targets 1 APMD, if not 2 higher. And that comes in play. The R is at 107, the APMD, 1 APMD, which is a price map distance move. One price map distance move is up at the UT1, right? So this kind of completed for the day, which is great. And then we will get new data here in a couple hours. But let's take a look at the weekly and break it down. And then we do have a lot of active orders sitting here in Bookmap. So this is going to be interesting to talk about. Couple important things to talk about with Bitcoin. One specifically is we are right around the previous year's high. That typically has an impact on larger money allocators, right? So fundamentally, if your mandate is to buy Bitcoin, you have time under last year's high. Why? Because if you pull up the asset class, generally, it's going to show a negative return, right? So they can go to their investors and say, well, the asset's actually down in the year, we got you a better price, right? However, the moment that the market goes over the last year's high, that creates almost a FOMO scenario where they have to report to their investors and say, look, the market's over last year's high, it's actually positive on the year, and we're under allocated. That's a worse scenario for portfolio managers than taking small losses, right? So that psychologically is a very important level to talk about. You can pull that up on a chart. It's super easy, but that is something that I'd like to share to start. Same thing here with Bitcoin. Bitcoin on the weekly, positive sentiment bias. So the expectation is dips will be bought. A price over the directional, 105, 509, and 4. The expectation is that the market is going to extend. Where is it going to extend? 1 APMD, directional to the UP, directional to the R level here. This is actually the DP. Is a normal expansion, right? If we can base over 109 and a quarter tonight, we have the potential to really take a stab at 113 and a quarter, right? And that's just last month's highs, basically, right around there. And that would be a normal expansion for the week, right? So here and now, things to look for. First and foremost, there's been no price structure break, right? Last night, broke, held, continued to hold, right? At this particular point in time, there's no reason to fade it, right? There is arguments to say that profit taking, right? Anytime you hit 1 APMD, it's always a good reason to take a profit. However, really structurally, the market is in a bull trend digestion, right? Which is a signature state, underlying positive foundation, but the current expectation is for a sideways digestive trade, right? So typically the market has made a sharp advance in the prior session and needs a sideways session or two to catch up, right? Where does that go and be proven wrong? If we can base over 109 and a quarter tonight, we really have the chance to extend, right? That would be a normal expansion into a binary event, which would be the FOMC, to where the market can reassess risk, right? At this particular time, 109 and a quarter is the biggest figure to monitor. Let's talk about the downside now as well, right? While the market looks good, I hop off tonight, it could immediately go bad. Where is that bad defined? Really, you have price structure here, but you really have price structure here. So if the market's going to break and still hold 107.3836, still positive. It's digestive. It's performing more to the state, right? But it's positive. Really, you need a market under 105.5094 to say that this market has a chance lower, right?
However, the expectation is
We're still in an uptrend. Market state suggesting more of a digestive uptrend. However, if we do get a base over 109 and quarter, then the doors open up for that higher, right? Market under 105.509 opens up lower. The expectation is there will be buyers here, and this is the best place for risk capital to be deployed. Anything under 101.3437 this week is a problem. And that is not a market to buy. That is a market to look to the left tail, right? And when I say left tail, Bitcoin volatility has slowly decayed over the last few months and is historically low, right? And so that left tail specifically, right, we have a call skew. That left tail not only is cheap in terms of volatility terms, but it's also cheap in terms of skew. So that's an area to look for value. But that's not even in play until we can break under 105.509, right? Otherwise, the expectation is we are in this bull trend digestion, which is the expectation. That is Bitcoin. Let's take a look over here at Bookmap. So to the market state, right, this is suggesting a more digestive trade. We have a heavy offer, and we have offers all across the book here. So 110, right, we have stacked up in here. 109, 108, 900, front running that 109, right, which is right here. Again, that's going to be the biggest figure to watch for the remainder of the week. If we can base over it, nothing can stop, or nothing has to stop this market. This market can continue to go. If we cannot base over it and it starts to act as more of a resistance level, right, these sellers start to repopulate, these sellers that are stacked at 110 start stepping down, that becomes a problem for the market, right? And so that's one thing to look at in Bookmap. On the downside, let's take a look at some of those resting bids here in the book. So we have a resting bid here at 106, 106.300. Again, that would be to the market state where we remain positive, but those bids support right around that directional figure. And that is an important level as well to really understand risk this week, especially to the downside. One of these months, there will be an expansion in range in Bitcoin. And those tails specifically on the 10 deltas out are going to explode, right? And so on the left side, the explosion would be typically a little bit bigger just because of how those are priced right now. On the right side, it would typically be led with a bit of euphoric price action, right? Which we often have seen in Bitcoin markets, right? So that is Bitcoin, that is Ethereum. That's the weekly outlook for both of those. So I'm going to open it up for Q&A. We did it a little bit different this week. I wanted to, we built everything into the website, so I figured it'd be great to showcase the website. So hope you guys enjoyed that. If you have any questions on that, let me know. But otherwise, we'll open it up for questions here in the Discord. And then if there are no questions, enjoy the week and good luck. I see. Awesome. Thanks for sharing. Yeah, no problem. I believe this is your first time to the stream, so welcome. Cool. All right. I don't think there's any questions this week, so if you are here in the US, enjoy the summer. Get some time off the screens, and good luck this week. It's going to be an interesting one.